Hey guys, John Plumey here, Actionable Intelligence. Today is Saturday, January 11th, and this is the weekly market update. The disclaimer, as always, anything that you hear or see on this podcast or video is not to be taken as investment advice. I'm not a registered financial advisor. I cannot give you investment advice. Please consider everything that you hear or see here for informational purposes only. Please do your own due diligence. It's your money. It's your responsibility. Okay, starting out this week's chart pack. So this is from the Financial Times. I think I've shown this before. This is a chart of consumer confidence in U.S. stocks or in increased stock prices. And this is, of course, mostly retail investors. But as I've pointed out several times in the last weeks and months, everybody's all in U.S. stocks. I mean, we've foreign investors, investors here in the U.S., everywhere. So this probably isn't going to end well. We're past like extremes that we've seen in the past. Excuse me. But nevertheless, things can go higher. Again, I'm sticking to my guns on the buy the election of Mr. Trump and sell the inauguration. I think a lot of things, a lot of expectations are being built in to the new administration. And I've explained for over the last several weeks and on various interviews I've done recently why I think it's going to be quite challenging to meet those expectations. And so I think that if there's a shortfall in reality versus expectations, then it could be very likely that we would see a repricing in U.S. stocks. But we'll have to see, right? We'll have to see what happens and see how it plays out. But when things are priced this perfectly or with the anticipation of what's being built into this or the perception or the expectations, then anything that shakes that expectation or doesn't deliver can result in a sell-off. So that's my view, and I'm sticking to it. This is an anomaly. You're so far out of the historical norm here. And again, it's quite possible. I do say that it's quite possible that I'm wrong. This is a new era. The United States is just pulling away from the rest of the world, and this will just be, with the Trump administration coming in and with all the changes they're going to make that are pro-market, changing the tax code and the Doge committee and deregulation. It's just going to be, so much winning that we're not going to be able to take all the winning that we're going to see. So we'll have to wait and see. I don't think that that's the case. I think there will be things that happen, but I don't think that it's going to be sufficient to meet the expectations that have been built into these stock prices. And when I see consumer, we're talking about consumers, we're talking about retail investors here. They're always wrong at turning points, always wrong. And they're wrong here, in my view. I think the ponds that you want to fish in are these three places. This is a pretty good chart from top-down charts. I really like the work that this fella does. Should follow him on Substack. So basically, the blue line shows small cap stocks versus large caps. Obviously, large cap tech has done very well. Small cap stocks have not. Value is out of favor also. It's down quite a bit over the last several years, just as uh, global stocks, ex the US versus US stocks, have performed the worst. These are the places that I think offer the value. These are the places, these are the ponds I'm fishing in. Uh, you could a wag could look at this and say, well, these things are in downtrends. Why would I want to buy these? Well, we can never really pick the exact tops and bottoms. So again, my thesis where I start is sell overvaluation and buy undervaluation. And these are the areas I think that where undervaluation and cheap stocks, cheap assets exist. And no one cares about it. No one wants to look at these things. And I think that's just, my contrarian view. And I think you have to be a contrarian. Um, and to be a true contrarian, you have to identify what's out of favor and then be willing to buy those assets, uh, especially if you can identify catalysts. And I think that we've put forward recent interviews. I've talked about it, and I've talked about it on this channel. Why I'm bullish on Latin America, the perception change that could happen with elections happening in several countries there over the next year, 18 months, and 2 years. And I think that we could see some sea changes. And if you get a change in government, that can change the view from the outside and cause a re-rating. That's basically the elevator pitch, if you will. So this is where I'm hunting. I don't really want to be in things that are historically overvalued or way out on extremes. I just don't think you're going to have success there long term, but we'll see. Again, this is the big spread between assets, U.S. assets, and the rest of the world. This is U.S. assets, stocks, high yield credit, the dollar, housing, basically pretty much everything, right? Versus the rest of the world. That's what you're showing here, how extremely out of sync the U.S. is valuation wise versus the rest of the world. And, if you go back, this chart goes back to 94. Again, top down charts. This stayed fairly correlated until recently. And again, the argument is made that the US now is just so far ahead and above everyone else that it warrants this valuations and this attention. I just don't agree with that. So this is from Charlie Billio on X, another good person to follow, pointing out a Buffett quote from 1999 says, "You have to be wildly optimistic to believe that corporate profits as a percent of GDP can, for any sustained period, hold much above 6%." And you see that basically for a while now, since probably the 2008 great financial crisis, we've had this tremendous outperformance in U.S. corporate profits. This is part of the reason why stocks have performed so well. But this is another outlier. Um, and so there's no doubt that the U.S. tech sector has, makes good products. It does, but when you have Munger talked about this, Schumpeter talked about this, many people have talked about this. When you have uh, outside the norm profit margins, right? Excess profits, you attract competition. And because uh, capital is going to be drawn to areas that have excess profits. Now, the argument will be made, well, you can't compete with a Google. You can't compete with a Microsoft. You can't compete. But there's been some extraordinary things at these tech companies that are changing now that weren't present before. These are not like capital, they haven't been up until what I believe recently have been capital intense businesses. They're knowledge businesses. They are, technical mind, getting the right minds and creating, products on the internet, what have you. And so the margins have been very high and they're not capital intensive businesses. But the new kid on the block is AI, and this is turning out to be capital intensive. Uh, these companies, as I've talked about before, and I think I have a chart coming up, are spending billions of dollars on these facilities, data centers, AI centers, computing centers that are costing billions of dollars. Not only that, in order to power these facilities, these companies cannot just rely on the local regulated utility to in a timely manner bring power to these facilities. These people want to move quickly, they're in competition, and that's why you've seen them trying to lock up existing plants or bring back nuclear plants that have been shut down recently. Uh, and so if they have to go out and build their own power plants or partner with other people to build plants, these are all capital intensive businesses then. And so this could have a detrimental effect on their profit margins, notwithstanding the fact that I don't think the case has been made fully that there's a lot of profits in AI. We haven't seen that yet. Do I think AI is useful and it's going to change a lot of things? Absolutely. Just like telecommunications and mobile phones change things and the internet changed things, but that doesn't necessarily mean that the initial uh, companies that were the perceived leaders at some point in the stock market ended up being the winners. And so there's a risk here that as these companies move from being less capital intensive to more capital intensive because of the data center build out and the fact that they're going to have to, whether they like it or not, if they want to do this in a timely manner, get dragged into being power uh, producers. These are capital intensive businesses. These are things that are really outside the ballywick of a lot of these companies. I mean, if you're the executives at Google, do you know anything about cogeneration gas turbines plants? I mean, really? I mean, we saw what recently happened. For example, I was just getting interviewed the other day, and I brought this issue up about what Elon Musk did in Memphis at the data center he wanted to put together. He's an impatient guy. He's a mover and shaker. He doesn't want to be encumbered by rules and regulations and bureaucracies and the old way of doing things. So they wanted to bring this data center online in Memphis. And I think, I can't remember the exact terms, but the point of the matter is he didn't wait around. He just brought in a bunch of trailer mounted aeroderivative gas turbine uh, units, piggybacked them, and turned them on inside the fence of his facility. He didn't wait for the utility. He didn't wait for permission. You could find articles about it. People were crabbing about, well, the emissions pollution. He broke all the rules. This is what was required to get the data center up and running. Because if he had to rely on the local utility and the regulatory authority, uh, getting things permitted and working with the utility is very cumbersome. People are not entrepreneurial in their thinking. Okay, they're bureaucracies and they're rewarded for doing things in a methodical, step by step, following certain procedures. And timeliness isn't necessarily one of the things that they're worried about. And so we'll have to see how this all plays out. Not only that, the thing about this AI thing that I think is interesting, these learning models, basically all of these data centers, these things are extracting and using all of this information, every book that's written, every research paper, every blog post, I don't know, all this information, and they're doing it for free. So you have intellectual property, some textbook or some paper that somebody wrote that these AIs have grabbed to learn in their learning model, but the authors of these papers are not given any compensation. And so you're starting to begin to see lawsuits being generated saying, hey, wait a minute. This is my intellectual property. Your AI is just using it for free, went out and grabbed it off the internet somewhere or out of another database. I want to be compensated for that. And so we'll have to see how that gets adjudicated. That could be additional cost. And so the true cost of building out this AI miracle isn't being reflected in the revenue being generated right now, or forget about cash flow. So we have a lot of money going out and not a lot of money coming in right now. Now, I have no way of knowing where we'll be in 5, 10, 20 years with AI. It's impossible. Do I think it will advance? Absolutely. Do I think people will find uses for it that I can't even contemplate? Absolutely. But we're talking about right now. Okay. And we're talking about stock valuations that are where, again, we have a lot of expectations being built into these 7 or 10 stocks that are carrying the entire market that have excess profits and now are getting more into capital intensive businesses. That was their advantage. They weren't capital intensive. And so they are becoming more capital intensive. And so we'll have to see how this shakes out, how it manifests. But, you know, this could be the this could be a threat to these margins. We'll have to see. You also throw in the fact that, during this time frame where these excess profits have existed, this was the time of like zero interest rates also. So interest expense, debt expense was basically you could get debt for for free, a lot of these companies. And so that's that's changing now too as we go forward because I believe that we're in an environment where interest rates are going to be elevated going forward, not low like they were in the last 10 or 15 years. That's additional expense. So we'll see. So this is a chart that comes out, Meb Faber puts out. I just grabbed like the top 10 or 12 companies. This is different metrics, cyclically adjusted PE ratio, cyclically adjusted price to cash flow, um, price to book. Then it averages this and creates a rank, tells you whether it's an emerging or developed market. Basically, the recent data is showing like Colombia. I want to point out a couple things here. I'm bullish Latin America, and it just happens to be that Colombia is probably one of the cheapest stock markets in the world right now. Another one that's having elections soon, where I think the government's going to change, is in Chile. It's fairly cheap also. Okay. And then you see on here Hong Kong and China, other areas that I'm interested in and have invested in. I see Brazil on here. I was more optimistic on Brazil a year ago. I'm less optimistic on it now, but I still think that this entire change in the political environment in Latin America, we'll have to see how things go. But I think that the whole, not every country may respond and move to a less statist government, more market orientated, but we'll see. You might be creating, my theory is that's quite possible we could be creating a flywheel effect here, a movement change, a MAGA, if you will, or you make Latin America great again, or for the first time ever. But I think that we may be moving in that direction. So, when things are this cheap, like in Colombia, for example, and you are pretty much certain that, you're going to have an election in, I think it's May of next year, if I'm not mistaken. So you're 18 months out, basically, and the current president is on his way out, socialist, whatever you want to call him, a statist, a left wing, not economically literate. If you get a center right government in there, a market orientated government, you're going to see a re-rating in Colombian stocks. And so the time to look at this, everybody's starting to sniff this out. I was looking at some recent moves in various ETFs for like Colombia, Chile, Peru. They have already started like moving up a little bit. That's not really a trend, but what I'm saying to you is that, as Druckenmiller says, we should not look at these things in the context of what's happening today, but what we think is going to happen in a year and a half, 2 years out. And I would suggest to you that if we do see the political change that I'm anticipating, we will likely see a re-rating in these countries and their stock markets. And there's tremendous value in large capitalization stocks in some of these markets. So it's not like you're going out and taking a huge amount of risk. I mean, there's stocks in Colombia and Chile that you can buy that trade on the NYSE that are paying, 8, 10, 12% dividends and have been paying them. And so, in my view, I'm going in big here because I'm very optimistic. And so you have to do a little bit of work. You have to use Google Translate. You have to read articles. You have to pay attention to what is happening in these countries and who is running for office, who's leading, how they adjudicate their elections. But I think if you do a little bit of homework and work, I think you can come to that conclusion. It won't necessarily be like it's not going to be like a Malay situation in Argentina, in Colombia or Chile. It'll just be, okay, well, these left-wing people are gone. That's enough to create a perception change in outside investors of this is going from bad to less bad. And as I've said many times, and I've seen many times in my investing career, going from bad to less bad can be, you know, multi-bagger. So something to consider. Um, and again, Hong Kong is another area that I'm very interested in the Actionable Intelligence Alert newsletter. We are invested in some Hong Kong companies. One's a property developer, one's another one that takes advantage of tourism in China. Um, Again, my view on this whole situation with China is that I believe that the incoming president's a deal maker, and I think that, business is the business of these people in China and with the Trump administration. And so, do I see this huge smoot howley trade war, sanctions, tit for tat? No, I think what you're going to have is a sit down and a deal is going to be reached. I've heard it called before, and I think it's a Mar-a-Lago Accord. Who knows what's going to happen? So this could be quite positive for a re-rating and simmering down this rhetoric of having this ridiculous war with China over Taiwan, so that nobody that's a regular person wants or cares about. We'll have to see, but I think some of these things there's opportunity here. And again, just in Chile and Colombia, if you just buy the ETFs, you'll probably do well. Jumping around here, it's got out of control. Okay. So, hey, 2024, another good year for gold. No one's paying attention. This is the gold. This is from Incrementum, Ronnie Stoiffel's outfit. People get on me for my pronunciation for that. But regardless, you could see this is from the recent, every month they put out the gold compass with a lot of charts. This is the gold in various developed market currencies. And so you look across this, I mean, gold versus the US dollar, gold was up 27% in US dollars. You can go all the way over here to other countries, this is a tremendous return. And so this isn't necessarily something to get, well, I'm 20 I'm so much wealthier now. The problem is that this isn't necessarily that gold went up, it's that these currencies went down relative to the dollar or relative to gold, I mean. Okay. This is the manifestation um of creating currency units to inflation and debasing of currencies. And so again, uh, obviously, as I've talked about before, the gold mining stocks have not necessarily responded to this, and I don't think they will. I don't think we're going to really have a big move in commodities or gold stocks or a lot of commodity stocks until we see, or if, in fact, the tech bubble blows up. That's what we really need to see. We need to see a shift away from this bubblicious stock money going into these few stocks, and in the past, when that's happened, we've seen a rotation into value and into commodities and into gold stocks. So uh, I'm not really anticipating a move, a catch up in these gold stocks until we see the shine and the tarnish go on these tech stocks. So, if you have a view that tech stocks are going higher, you obviously don't want to be invested in gold stocks. But I think for the patient few, with gold, I remain bullish on gold. I remain bullish on uh, hard assets for reasons that I've articulated in the past. And I think you just have to be patient, and I think the rotation will come at some point. But I don't think you're going to see a massive amount of capital rotate out of these tech out of this tech sector because it continues to work. It'll work until it doesn't work anymore, and then you'll see the rotation. Somebody asked me the other day, well, how much do you think the market could fall? I don't know. How much did the Nasdaq fall in that bubble in the internet bubble? 80%? Could we have, could we have a 30, 50% drawdown? That's very, well within the realm of possibility. Nobody can see that. No one will consider that. But to say that it's not possible when you see the overvaluation, well, that's kind of nearsighted. So anyway, I think this is, something you should subscribe to. It's free. They send it to your inbox, and then you also get the In Gold We Trust every year chart pack, which is about 200 charts. They don't necessarily just have all about gold. They track M2 money supply in the major economies, what the central banks are doing. These are all very valuable in my mind. They show you relative performance of the HUI gold stocks vis-a-vis gold. Same thing with silver. And they have a lot of other macro charts. So I would definitely go to their website, Incrementum, and sign up for the Gold Compass monthly report. Like I said, it's free, and I would take advantage of that. So this was a chart that was in the FT that Ocean Wall produced. I've shown this before, but it says enriched uranium is up 500% since Russia's invasion of Ukraine. We've talked about this before, and this is the chart that the FT used from Ocean Wall showing the uh, UF6 price is up 99% since the invasion. Uranium 308 is only up 48%. It's still pretty good over the last couple years. And Of course, the enrichment is up 500% because that's the bottleneck, right? And so here's comes some snippets from the FT article, which I'll put in the show notes if you want to read it. It says uranium prices hit record as thirsty AI data centers add to market squeeze. I'm not necessarily thinking that it's the AI data centers necessarily, because not really a lot of uranium has went to that, or nuclear plants have. I mean, we've seen them move towards that, but I wouldn't say that's the driver. It's kind of a misleading headline. But nevertheless, they get uh, into what's happening, but it's kind of skewed. Again, the media doesn't really know what's going on. So if you listen to the media for your news, they kind of got this a little bit wrong. So it says here the price of fuel for nuclear reactors has surged to a record high. Well, at least the enrichment is, as demand from artificial intelligence data centers exacerbates a squeeze on the market following Russia's invasion of Ukraine. So here's a quote from Nick Lawson of Ocean Wall, who I suggest you follow on Twitter and go to their site. And it's Ben Feingold is the other guy over there, I think his name is. Says, quote, "We just don't have enough conversion and enrichment in the West, and that's why the price has had this kind of move. And that price will only go higher," said Nick Lawson, chief executive of investment group Ocean Wall. You should be, if you're interested in uranium, you should understand what has happened with the sanctions. Russia's basically done exporting to the West for all intents and purposes. They control 43% of the enrichment capacity in the world. Is this solvable? Yes. I mean, you can, I don't, I'll probably write about it next month's, do an update, but the capital will come and create more conversion. I think Honeywell is going to expand their facility. I think Orano is going to expand. So there's some shuttered facilities and some expansions coming, but these things take time, right? And so I think it can be solved with time and money, but right now it's causing a bottleneck in the supply chain of uranium fuel. It says around 27% of U.S. enriched uranium imports in 2023 came from Russia, according to analysts at Bernberg. While U.S. utilities probably had enough fuel for this year, their cover will fall off substantially in 4 years' time, the analysts added. Quote, U.S. utilities will have to commence contracting discussions this year to secure uranium, particularly with the restriction of Russian uranium imports into the U.S. coming into place at the end of 2027. So again, it may be a situation where a lot of these utilities are not scrambling yet because maybe they want to see what happens when the Trump administration comes in, whether they're going to be able to end the war in Ukraine and get some kind of deal with the Russians, and then everything will go back to normal, and we go back to doing the way business was done before, and we don't have to worry about it. We'll have to see what happens. If that's not the case, then there could be a scramble for the remaining material that is available to Western utilities. I made the case. I'm quite sure of it now that you can forget about in over time. I believe that Kazatomprom, that uranium in Kazakhstan is slowly but surely going to be choked off to the west and sent east. That's without a doubt in my mind. It won't happen with an announcement. They'll just slow. These stupid you know, reasons like somebody didn't file a piece of paper for the Inkai joint venture and they had to stop production, which we reported on, which just happened. It's supposed to be temporary. We'll see. And then again, if you're Cameco, who is a joint venture partner, what are you going to do? I'm sure there's some provisions in the contract that they have with their joint venture partner, Kazatomprom, that for dispute resolution, probably some type of arbitration or something like that. But where does the arbitration take place? And is it enforceable? As the world, I get bagged on quite a bit. People say, you talk about politics too much. Do you not understand now? Is it starting to sink in for some of you folks that the world's bifurcating between two blocks or maybe even more blocks, and that these blocks don't care? So what if the arbitration is in Switzerland or London? Who cares? We're not going to show up. What are you going to do? That's what you're going to see an increasing amount of this happening. And the rhetoric of your politicians, instead of realizing that they have internal conflicts that are leading to the collapse of the societies in the West, want to have wars with everyone instead of having mutual beneficial outcomes. Okay, well, you can have it that way, but where are you going to get your uranium? Again, uh, what did the United States produce last year in uranium? Less than 500,000 pounds. And every domestic uranium producer is struggling to increase production, notwithstanding the fact that we're talking about another bottleneck here in enrichment and conversion. Again, these problems can all be solved, but I don't see any national incentive. Maybe when Trump gets in, actually takes over, there's going to be this Apollo program for taking care of these problems, but it still takes time. And what do you do in the interim? And so this is your opportunity, what I'm talking about in uranium. This is what I'm focused on. And to just say, well, none of these, if you don't understand what's happening geopolitically, it becomes more difficult to understand, number one, who has the leverage and who doesn't. So I think it's worth paying attention to, I guess is my uh, thing that I want to get across to people. So here's the chart I was talking about, tech investment moving higher. Here's the capex. Tech investment remains healthy. Capex amount amongst mega cap tech names, Microsoft, Apple, Google, Meta, Amazon, Nvidia is up 59% year over year, signaling strong investment in AI. Absolutely. Absolutely. But if you go back up until recently, really when this whole AI thing kind of took off and data centers, this is going exponential now. These were capital light businesses, right? They didn't have to spend a lot of money on capex. Now they're having to spend all this money on these data centers. And then, like I said, they're going to have to get into the power production business because the utilities just are not going to move fast enough to deal. If you're going to spend billions of dollars on a, exocenter for AI, you have to have the power lined up before you start construction. It's like we can't you can't just say, okay, well, just put a substation, just put a transformer outside, we're good to go. I could foresee a situation in some areas with these ISOs where they say, look, the demand that you're trying to put onto this grid is going to cause power prices to go up, and it's going to become a populist issue with consumers. People don't want to see their power prices go up because you're taking all this demand into these data centers. So these folks are going to have to, these folks being these tech companies are going to have to solve this energy problem themselves. And it's really expensive and it's really specialized and you really have to know what you're doing. Is there sufficient expertise to have this huge build out? All you have to do is look at like GE's orders for their gas turbines. Okay. Listen to their conference call. Listen to these other, is the engineering, procurement, and construction bandwidth high enough to support all this, or will costs soar there also now? If, where are you going to get all these people to do this? I mean, even when I was in this renewable business before I got out of it, basically retired, we had a shortage of substation people and people that had expertise on some of this stuff. And so, it's going to force costs up for the expertise. It's just not there. And so we'll see. But that's part of the argument, I think, that maybe this all goes back to these valuations. Well, can the valuations are based on a certain expectation that certain things will happen vis-a-vis AI? And when you look at this, you say, okay, well, look at the capital investment, but this is, you know, is it going to pay off? And are you going to be able to actually do it? If you want to build a nuclear power plant, they have the money. Google could build a nuclear power plant if it want to. It's still going to take 10 or 12 years or longer, who knows? And then everybody's talking about, well, SMRs. Okay, one of these SMRs, I mean, I think a few people have some designs approved by the NRC. When are they coming into production? When are they going to start operating? See, this is the problem. People say stuff like that, but stuff needs to happen like in the next 3, 6 months. Like I talked about that story with Musk in Memphis. Hey, I got to turn this thing on. The grid can't support it. Call up somebody, GE or somebody or Siemens, and get some skid mounted, you know, aeroderivative gas turbines here and we'll figure it out. But you're not going to be able to scale that up. So here's another situation why I'm bullish on this whole land bridge and TPL and these guys with the possibility that they could benefit from this whole AI build out. Says data centers water consumption for cooling. It says computing is thirsty work. Global data center water consumption in gallons per day, and you see how it's exploding higher, uh, or forecasted to. You see it's been increasing over time. Why? Well, back in the day when they had the initial data centers, I mean, you could even go to your little company, rinky-dink company's data room, IT room, and you probably have a mini split in there that's separate from the HVAC system just to cool that room. You know, this processing power, these boards, these chips, this equipment generates a tremendous amount of heat. And as the computing power has accelerated, uh, more heat is generated to the point where it cannot be air cooled anymore efficiently. And so therefore they have to be water cooled now. And so tremendous amounts of water are needed now for these huge centers. And we're talking about, facilities with thousands and thousands of square feet of these things. And when you're water cooling those, you can't build up. You can't stack these things because the weight of the water. And so you need this is another reason why this land bridge and TPL may be in a good spot. They have access to water and their properties that they control. They have open space, and no one's going to complain about building a 100 million square foot data center out in the middle of West Texas somewhere. Okay, and if you build a cogeneration plant there where you have you know basically natural gas that's being trapped there because of the oil production. There's a tremendous amount of gas that cannot be exported out of those areas. Then you've, solved the fuel problem. You've solved potentially the water problem and the space problem and the, NIMBY problem. So this is why I feel pretty good about these things, and I'm watching what they're doing. Uh, I do believe that Lambridge just have a letter of intent signed, but there's nothing really being built yet. We'll have to wait and see uh, what happens. But I think these things represent a tremendous opportunity because these data centers evidently are going to happen. And because of this water, you can't just go to some municipality like Alexandria, Virginia, or somewhere around DC where there's a lot of data centers and say, well, I want to build a million square foot facility. Well, where are you going to put it? Number one, the property prices are very high. And then you need all this water. So you go talk to the local water utility and say, I need all this water. They're like, we can't, we don't, our infrastructure can't support that. And so you start running into infrastructure. Same thing with power. We've talked about that several times. So yeah, this is why I've been talking about. I don't have it in the portfolio because I think it's speculative, but it's something that you should have on your radar screen if you're interested. A way to play this that doesn't depend on one company's chips or something like that, because they'll just build these spaces and get tariffs for lease the land, get money for the water, uh, things like that. So it remains to be seen if this actually happens. Some smart people think it will, and I think it's worth a speculation and an allocation to because I think it could pay off big time. So this was a chart that Musk tweeted out. This is actually it's one of the areas, and the deregulation, I think, where these Doge guys may be able to make some headway. It's interesting. This goes back to 1913 when they implemented the income tax. You see how government, it doesn't matter what administration, it doesn't matter who, the state is always going to increase these rules. And so when you have 73,608 pages of federal tax rules, the burden on the taxpayer, individual taxpayer, corporate taxpayers, there's a cost to this. And you can look up, I don't know off the top of my head, I'm not, it's a tremendous cost. And so simplifying this and making it easier for people, not that you get rid of taxes, not that you get rid of the IRS. We're not even talking about that. We're saying, can't this be simplified to make it easier for people to comply? This is part of the problem. When you have 73,608 pages of federal tax rules, it kind of goes back to what Stalin said, right? Show me the man and I'll show you the crime. I mean, everybody's probably every year in some type of violation of some part of the tax code that they just weren't aware of it. And that is not an excuse, according to the federal government and the IRS. Ignorance of tax laws is your problem, not theirs. They create these huge bureaucracies. It's no conspiracy. It's just the nature of the state to grow and for organizations, especially these bureaucratic state entities, to grow and grow and grow until somebody comes in and just kills it. So I'm not saying you get rid of the IRS, but we can't go back to like in 1984. Why do we need three times the amount of, literally almost three times the amount of pages of the tax code? What is the point? Did it increase the amount of, people should look at this and say, a lot of this is done by the legislators, though, to reward certain groups, okay? Or to monkey around with social policy. Like if, of course, as you know, if you go out and build these windmills, you can have this tax credit. If you go build low income housing, Section 8, you could get these, let's get rid of all this, okay? And just say, that's why I'm a big fan of the flat tax. You just have a postcard. This is my adjusted gross income. This is the tax rate. Boom, you're done. Okay. And so I think they can make some headway here. I think this is going to be a possibility. I think regulations will be too, and that will be helpful to the economy. Anything that lowers the burden on entrepreneurs and capital to do business, that will be beneficial. But it won't be something that just happens in 3 months. This will be cumulative over time. And so again, we'll have to see what happens. But the fact that Musk tweeted this means it's on their radar screen and they're looking at it. So we'll have to see what they can do. And I'm hopeful, but I mean, this only goes to 2012. I don't even know what it is now. That's 12 years ago. It's probably even more now. But this kind of shows you it doesn't matter what political party is in power. This has just climbed decade after decade. So, very interesting chart in my view. So I've been having my eye on the UK. Very cheap stock market, some very interesting companies there. But UK stocks are cheap for a reason. They squander. You basically have, this is another example of another government in the West that does not care about the population. Uh, they are globalists. They're wedded and believed in the globalist agenda. I mean, you had the Brexit. We all remember that. That was an excellent opportunity to break free where from the EU, which they did, and they squandered this. The Conservative Party squandered it because they don't care about it, okay? They care about the globalist agenda, okay? Stammer and Sunak and all these people, they want to be part of the EU. They want to be part of the globalist community. They want to be, they don't want to be mavericks on their own and creating a dynamic economy and dealing with the immigration problem and all these other situations that they have in the UK. And so what you have here is government approval in the UK. Excuse me. So, I mean, this goes back to 2011, right? Um, Current January 5th, 2025, only 16% of people approve of the government. 63% disapprove. And with this recent, I'm not going to get into it too much, the recent scandal I mean, I knew this was going on with these rape gangs and stuff. Everybody knew it. Nobody did anything about it. Why didn't they do anything about it? Well, these populations now are of sufficient quantity that they vote liberal. They vote, okay? And not only that, if you go after these people, uh, they're going to be in the streets. And now, what are you going to do? You've created this golem of bringing these folks in who are very militant, are not scared to exercise their militancy and act it out in real time, including, I don't have to cite the examples. If you've been paying attention for the last 25 or 30 years, you know what these people are capable of. And so if you start going after these people, they're going to push back. They're not just going to lay down, okay? They'll be in the streets. There will be violence, okay? And so the government now has created this golem and doesn't know what to do. And so it just pretends the problem doesn't exist or goes after the actual victims. I mean, I've said this before, a government that will not protect its women and children, okay, ceases in my mind to have any kind of reason to exist anymore. Okay? And so if somebody says, well, the laws say this, what laws? What laws? The primary reason that government exists is to maintain order, number one, okay? And to have laws and make sure things like this don't happen, okay? And to prosecute people that do this. But they're scared of these people now, and there's sufficient number of the population where they won't. If you go and try to arrest these people, there's going to be riots. And then they don't know what to do. And then you have to see, this is what people don't understand. These problems are all solvable. You create a population, you bring them in that's not compatible, that has a militant view, philosophical view. Don't need to get into it, okay? And then, that will use violence, has demonstrated that will use violence to push forward their agenda. So then you have to be prepared to use an extraordinary amount of violence to fix that. And people aren't willing to do that. They're scared. Keir Starmer? I mean, somebody cut his balls off and threw him in a safety deposit box. This guy isn't going to do anything. These people are all part of the problem. And so the place, you know, the things that need to be done over there, all the problems that they have internally, these governments don't care about the populations. They don't care about the individual people, their constituents. They want to get in power, and you go from a conservative government to a liberal government, back to a conservative government, and they all do the same thing. It's all rhetoric during the election cycle, and then it's servitude to the globalist agenda or to the hegemon. And people say, well, we'll just vote them out and vote the other guys in. You're going to see the same thing in Germany. Okay, Schultz is going to be out in February. So what? You're going to get Frederick Merz in there, who's another wet noodle. Okay. And they're going to have to make a coalition with the same people that are in the current coalition. So what's really going to change? Nothing. Is there going to be reconciliation? Is there going to be push to end the war in Ukraine? Is there going to be a push to get the sanctions lifted and get energy imported and materials from Russia so they can get back to business? No, there's not even a discussion about that. So what changes? Does that help the people? Wealth, the average person's wealth in Germany is declining now. Their incomes are declining. So, you know, you're not just going to vote your way. I keep saying this to people. You're not going to vote your way out of this. I'm just going to say it. The levels of violence that will be required to fix this, if you look throughout history, that's what ends up happening, is inconceivable to the average person. And so, you'll just continue to wither away until because voting doesn't do anything. They had an election in France. Macron's still in power. He has no business being in power. They cut these deals, they manipulate things so they can stay in power. He has no mandate. Stammer has no mandate. Okay? There was record low turnout for these elections. They don't matter. And that's what the people are apathetic. Well, what can I do about it? And so, you know, the problems aren't taken care of. And so what you have in the UK is something similar we have in the US. I mean, here we go again. Here's the UK 10-year bond yield, 4.81%. There is a number up here, just like in the US. I don't know if it's 5.5, 6%, where things start breaking. Okay. And then you have another economic crisis. This is a reflection, I always look at this as like bond prices, long-term bond prices for a country kind of are in some respect, a reflection of people's perception about the governance, the economic conditions, or what have you in a country. And you have no real leadership. Okay. And so what you have here is, if you want to go from the lows of September, early October of last year, I mean, that's 4 or 5 months. You have rates up over 100 basis points and appear to be moving higher. Again, at some point, you get up to a level that breaks things. Same thing in the US. This is another thing that I am talking about. You have to roll all this debt this year, and rates at some point, you have to term this debt out. You can't just run everything on, 90-day T-bills and 1-year bills, not trillions of dollars. You have to term it out. And so when rates and these bond buyers, people that buy bonds, bond vigilantes, if you want to call them that, they know that. And so it's like, wait a minute, if you want me to buy a 10-year security of a physically irresponsible government, then I need to be compensated with a higher rate because I'm not sure you seem incompetent in managing financial things in your country. Therefore, I need a higher rate to compensate me for that risk and that inflation risk. And so I find a lot of companies in the UK that, man, they're cheap, but am I prepared to buy them? No, not in the current situation, but it is on my radar screen. I guess that's the point I want to make. I don't want to sit here and bag on these countries. Everybody knows what's going on. But again, if you get the right changes, if you get a revolution, a MAGA type situation, which I don't really see on the horizon right now, I think it's coming though. I don't know how many cycles it'll take. Eventually, things get bad enough, I think, where the pendulum swings. But right now, it's just not on the radar screen for a lot of these countries. I mean, look at the PMIs of France and Germany. I think I looked at them last week. I think manufacturing PMIs in France and Germany are like, in France, it's like 41. Anything below 50 is contraction. Germany's like 42 or 43. I mean, these things, this is a problem. Okay. A lot of it's because of bad policies that have been driven by globalist agendas around climate change and net zero and these ridiculous, you know, overspending and just a lot of nonsense. And again, that gets you accolades at Davos. That gets you accolades, amongst all the pointy shoes at all these conferences they go to. But the average person is not benefiting from these policies. Okay, it's actually hurting them. And people still, people don't want violence. People don't want revolutions. People don't want these things. But at some point, if the democratic process doesn't avail them of an ability to change, then, you know, if things get bad enough, you could see a radical change. I mean, we saw that in Argentina, but 70 years of mismanagement in the economy, though. Okay. So we'll have to wait and see what happens. But again, it's another company, just like Venezuela's on my radar screen, but I'm not buying anything there. At North Korea, I keep apprised of what's going on. You never know. Things can change. And if they do, then you have to be prepared, I think, because things are cheap. And only, like I said, something going from bad to less bad can lead to a massive re-rating. So it's worth at least keeping an eye on these things, in my view. And not only that, I mean, if you have a crisis in the UK, if these bond rates, I mean, if these bond yields keep going up, like I said before, something's going to break hard. I don't know what it is. Something stuff is out there, and once these things start breaking, they seem to domino, right? Then you can be right into a crisis very easily that gets tipped off by who knows what. And I just don't see, just listening to some of the discussion around this recent incident with these rape gangs and the cover-ups around that. These people are not the kind of people that are going to be very helpful or useful in a crisis. They're just not leaders. They're put there for a reason because they will do the bidding of the people the interested parties that have the agenda, the globalist agenda. These people are not real thinkers. They don't really have a mandate. They're just there, to carry out, to gum the works up of what the people want. Okay. I mean, the UK should be flourishing since Brexit. They should have, they've had the opportunity to do that, to break away from the EU, but the ruling class, the political class in Europe, in UK wants to go back to the EU. I can guarantee it. So, they're not doing anything to take advantage of it. And the previous Conservative Party wasn't either, and that's why they got smashed in the election. But this is no better. So we'll see what happens, but not optimistic. Okay, guys, that's it for this week. Appreciate the viewership, the support. I want to remind everyone, if you're on the fence about subscribing to the Actionable Intelligence Alert newsletter, the paid version, it's currently $179 per year for 12 issues. We have a model portfolio in there and a model dividend portfolio. I am going to be raising prices later on this month in January. And so if you are on the fence about subscribing or not, then I would suggest that you make your decision because, like I said, prices are going up. So please avail yourself of the current prices before I raise them. I'm going to take them up from 179 per year to 199 per year, and you can save yourself 20 bucks if you're on the fence. Okay, guys, that's it for this week. We'll talk to you next week. Thank you.